If Boeing, one of the world's largest and most influential aerospace companies, were to go bankrupt and cease airplane production, the ramifications would be profound and far-reaching. Boeing is not just a manufacturer of commercial jets, it is a pillar of global aviation, a significant player in defense contracting, and a cornerstone of the U.S. economy. The sudden disappearance of Boeing from the airplane manufacturing sector would trigger ripple effects across industries, economies, governments, and everyday people worldwide. In this video, we explore what that scenario might look like in detail, from the immediate shocks to the long-term consequences for aviation, supply chains, labor markets, international relations, and the future of aerospace innovation. To understand the magnitude of Boeing's potential bankruptcy, we must first consider the company's role in the global aerospace ecosystem. Boeing competes primarily with Airbus, the European aerospace giant, for dominance in the commercial aircraft market. The rivalry between Boeing and Airbus has spurred decades of innovation, competitive pricing, and technological breakthroughs that have made modern air travel more accessible and efficient. Boeing's lineup includes iconic aircraft like the 737 series, the 777, and the 787 Dreamliner, which serve airlines worldwide. Additionally, Boeing supplies military aircraft and defense systems to the U.S. government and allied nations. If Boeing went bankrupt and stopped producing airplanes, the most immediate effect would be a massive disruption in the global commercial aviation supply chain. Airlines that have ordered new Boeing planes would face uncertainty and delays. Those operating existing Boeing aircraft might worry about spare parts availability and maintenance support. Aircraft leasing companies, which hold large fleets of Boeing planes, would be forced to adjust their portfolios and might face asset devaluation. Such a disruption could shake airline operations globally, impacting routes, ticket prices, and maintenance schedules. Airbus would become the near-monopoly supplier of new commercial aircraft worldwide. While some smaller manufacturers like Embraer and Bombardier exist, none currently operate in the same scale or product range as Boeing or Airbus. This monopoly would give Airbus unprecedented market power, allowing it to set higher prices and possibly slow innovation due to the lack of competition. Airlines might face higher purchase prices for new jets, potentially driving up the cost of air travel. Additionally, dependence on a single manufacturer could raise geopolitical concerns, especially for countries wary of European dominance in the aviation sector. The U.S. government would likely face intense pressure to respond to Boeing's collapse. The company's ties to defense contracts, national security, and American jobs make it a strategic asset. There could be attempts to bail out Boeing, restructure it, or nationalize parts of the aerospace industry. Failure to act might risk weakening U.S. aerospace leadership and ceding critical technology to foreign competitors. The government might also invest heavily in developing alternative aerospace firms, or expanding support for smaller manufacturers to reduce reliance on Airbus. The bankruptcy would devastate thousands of Boeing employees and their communities. Boeing employs over 140,000 people worldwide, with tens of thousands working at manufacturing plants, research centers, and offices in the U.S. Cities like Seattle and Charleston rely heavily on Boeing jobs for their local economies. A collapse would mean massive layoffs, economic downturns in these regions, and the loss of highly skilled aerospace talent. Retraining programs, unemployment benefits, and economic diversification would become urgent priorities to mitigate the social impact. The effects would ripple through the broader aerospace supply chain. Boeing relies on hundreds of suppliers, from specialized component manufacturers to software developers. These suppliers might lose major contracts overnight, causing bankruptcies and layoffs throughout the industry. Smaller suppliers dependent on Boeing business could face closure, while larger suppliers might scramble to replace lost revenue with contracts from Airbus or other sectors. The entire ecosystem supporting airplane manufacturing would need to adapt or face collapse. From a technological perspective, the absence of Boeing as an innovation engine would slow the pace of aerospace advancements. Boeing has been at the forefront of cutting-edge technology such as composite materials, fuel-efficient engines, and avionics systems. With only one dominant player left, research and development investments might decline, affecting the evolution of greener, safer, and more efficient aircraft. This could have long-term consequences for global efforts to reduce aviation's environmental footprint and improve safety standards. On the international stage, Boeing's bankruptcy would shift the balance of aerospace influence dramatically. Countries allied with the US, and especially in NATO, rely heavily on Boeing military aircraft such as the F-15, F/A-18, and the C-17 Globemaster. A disruption in Boeing's defense production could force these allies to seek alternatives from other manufacturers, possibly including Russia or China, altering geopolitical alliances and defense strategies. The US might lose leverage in international arms deals and strategic partnerships. In the commercial space sector, Boeing plays a significant role as well. Through Boeing's involvement with NASA and commercial space ventures, the company has contributed to spacecraft design, satellite launch vehicles, and space station components. Bankruptcy could delay or derail ongoing space projects, impacting scientific research, commercial satellite deployment, and even national prestige in space exploration. The vacuum might be filled by companies like SpaceX, but the transition would not be seamless. The airline industry would face both immediate operational challenges and strategic dilemmas. Many airlines have placed orders for new Boeing jets for fleet renewal and expansion. Without Boeing aircraft deliveries, airlines might scramble to adjust capacity plans, lease more aircraft, or delay expansion. The competitive dynamics of the airline industry might shift, with smaller airlines or those with Airbus heavy fleets gaining a temporary advantage. Ticket prices might fluctuate as supply constraints affect flight availability. Insurance and financing industries would also feel the impact. Boeing's bankruptcy would raise concerns among lenders, insurers, and investors involved in aircraft financing. Existing loans and leases might be renegotiated, and the value of Boeing-related assets could plummet. This could lead to tighter credit conditions for airlines seeking to finance new planes or maintenance. Aircraft lessors would need to reassess risk models and possibly increase leasing rates, which would indirectly affect airline profitability. The environmental impact of Boeing's exit from the market would be complex. On one hand, reduced production of new aircraft might slow the growth of the aviation sector, potentially reducing carbon emissions. On the other hand, the lack of competition might slow innovation in fuel efficiency and emissions reductions, delaying progress toward cleaner air travel. Airlines might have to operate older, less efficient planes longer, increasing overall emissions. The broader U.S. economy would also suffer from Boeing's bankruptcy. As a major exporter, Boeing contributes billions of dollars annually in trade surplus. Losing Boeing's export revenues would widen the trade deficit and could weaken the U.S. dollar. The stock market would react sharply, especially in sectors related to aerospace, manufacturing, and defense. Investor confidence in U.S. industrial capacity might erode, affecting capital flows and economic growth prospects. There would likely be a surge in opportunities for foreign aerospace companies. Airbus would gain immediate market share, but Chinese firms like Comac and Russian companies might also see openings to expand their international presence. Emerging aerospace companies in India, Brazil, and other nations might receive increased attention and investment. This redistribution of aerospace market power could alter the global economic and geopolitical landscape for decades. The consumer experience of air travel could change in subtle and not-so-subtle ways. With only one dominant aircraft manufacturer, airlines might have fewer choices in terms of plane models and cabin features. Competition among airlines could decline if higher plane prices increase operating costs. On the other hand, airlines might focus more on service quality and pricing to differentiate themselves in a less competitive manufacturing environment. Passengers might also see longer waits for new plane deliveries and potentially more frequent flight delays or cancellations due to maintenance issues on aging Boeing fleets. The legal and regulatory landscape would become extremely complex. Bankruptcy proceedings for a company as large as Boeing would involve numerous stakeholders, including creditors, shareholders, employees, governments, and suppliers. International trade and aviation regulatory bodies might need to intervene to ensure fair competition and maintain safety standards. Intellectual property rights, patents, and ongoing contracts would be contested, possibly leading to lengthy litigation that could slow recovery efforts. The cultural impact of Boeing's collapse should not be underestimated. Boeing is an iconic American brand that has symbolized innovation, engineering excellence, and national pride for over a century. Its demise would shake public confidence in American manufacturing and technology leadership. There might be widespread mourning in communities tied to the aerospace industry and a broader sense of loss regarding the country's industrial heritage. This cultural shock could affect morale and national identity, potentially fueling political debates about industrial policy and globalization. Looking further into the future, Boeing's bankruptcy might catalyze the rise of new aerospace players and business models. The vacuum could encourage startups and tech companies to enter the aerospace arena with innovative approaches, such as electric or hybrid aircraft, urban air mobility solutions, and autonomous flying vehicles. Governments might increase funding for research programs to nurture domestic aerospace innovation. The crisis could spur a reinvention of how airplanes are designed, manufactured, and financed. For Boeing itself, bankruptcy does not necessarily mean the end. Many large corporations emerge from bankruptcy through restructuring, new management, and strategic refocusing. Boeing could shed debt, divest non-core businesses, and focus on niche markets or military contracts to survive. However, the road to recovery would be long and uncertain, requiring significant capital, regulatory approval, and market confidence. The company's future would hinge on its ability to adapt to the new aerospace landscape. In conclusion, the bankruptcy and exit of Boeing from airplane production would be a seismic event with deep and wide-ranging impacts. From the disruption of global aviation supply chains and the reordering of commercial aircraft markets, to job losses, geopolitical shifts, and technological slowdowns, the consequences would touch nearly every aspect of modern life. However, such a crisis could also serve as a catalyst for innovation, new business opportunities, and a rethink of how aerospace evolves in the 21st century. This scenario highlights how intertwined global industries are, and how the failure of a single giant company can reshape economies, politics, and societies worldwide. For consumers, airlines, governments, and workers, the challenges would be immense, but the response could also open the door to a new chapter in aerospace history, one defined by resilience, creativity, and transformation.